G'day everyone, welcome back to the show. We're going to be talking today all about home guarantee, which is unbelievably topical at the moment for probably, 500,000 Australians who are thinking about buying a home. And so joined today by one of our newer brokers, joined us a few months ago, came out of one of the illustrious banks, lot of experience. And Jake, welcome to the show. Maybe just give a little bit of intro about yourself, where you've come from, and then we can dive straight into the topic today.
No, thanks, Vince. Excited to be on today. So I've had nearly 9 years experience in the finance industry. I've come from one of the big four banks over to the broker side of things. I spent the better part of 6, 7 years as a lender for the bank, and just starting out my broker life, we'll call it.
Yeah, so big on mortgages, been around home loans for a long time, newer to broking. There's probably a whole podcast we could go into the compare and contrast, but we'll leave that for today. We'll dive straight into home guarantees and these guarantee programs. And I guess firstly, let's just start with a lot of people are aware of these. So I don't want to assume knowledge, but I think it is worth at least putting us in the zone. What are these home guarantee programs? Just describe what they are and who they're for, and then we can go from there.
Yeah, sure. So the home guarantee scheme is essentially a government backed program that it allows first home buyers to get into the market with a smaller deposit. Instead of needing that traditional 20%, you can enter with as little as a 5% deposit upfront without paying any lender's mortgage insurance. The government then acts as a guarantor on part of the loan, and it reduces that upfront barrier that can be a bit of a pain point for first home buyers in the past. You still need to meet all of the bank's lending criteria and requirements, and the scheme has its eligibility as well. But it's a great way to get into the market sooner.
Yeah, and so specifically though, what it allows a buyer who's using the scheme, and we'll talk about who that is and some of the eligibility in a minute, but it allows the buyer to avoid mortgage insurance they would otherwise have to pay, and therefore avoid having a big chunk of money that they would pretty much. I mean, it's in a large part dead money. Is that kind of the way to think about it?
Spot on. Spot on. Couldn't say it better myself.
Perfect. Okay, cool. So let's get into eligibility then. Like who? I mean, it's first home buyers, right? But let's talk in maybe some more detail about the eligibility.
Yeah. So the scheme is really aimed for, as you said, first home buyers. So Australian citizens or permanent residents that are entering the property market for the first time and who are looking to purchase an owner occupied property. It works for singles, couples, even groups of friends or siblings that are buying together. Whilst being aimed at first home buyers, is actually a little known fact as well that if you haven't owned a property in Australia for the last 10 years, you're also eligible for that scheme as well. So great for someone trying to re-enter the property market for the first time in a long time.
Yeah, I mean, and let's start. Is that because someone might have previously bought, and I don't know. I'm thinking they maybe they were in a relationship, and that has ended, and now they're not a homeowner, and they haven't been in the market for 10 years, and they're trying to get back off the renting. Is that what that's? I'm trying to understand why that
Yeah.
comes in. That's an interesting tweak.
I think it's definitely that's a very common scenario. I think the other one might be as well as I've had clients in the past who had purchased a home and then subsequently sold that property to put money in their business, and over 10 plus years, that business has now grown, and that's now allowing them to re-enter the market as well.
What an interesting idea. And when you said before about friends going in, or even a couple going in, so neither of them have that neither of them could have been a homeowner in that their 10-year period for the whole deal to qualify. Would that be right?
That is correct. So both parties need to be first home buyers, and that's as well as if you're couples as well. So you're a married couple, but the husband's owned property a couple of years ago or still owns an investment property. That makes you both become ineligible for the scheme. So both parties
Got
need
it.
to be
Okay.
first home
So
buyers.
yeah, otherwise that person might have to buy by themselves in some way, but they'd have to be completely separate from their spouse or significant other. Okay, fully understand. And then a thing that crops up a lot. So this is a national program. I understand.
Yep.
Is that right? Yep,
Yep.
national
Federal.
program.
Yep. Federal
But
national.
it's sort of implemented at a state level. Like it obviously, when you buy in a particular state. Is there some variance or some things that happen from state to state? Like what are like eligibility or caps or anything like that?
Yeah, so the main cap will be your market caps. So that's the big talking point at the moment because those market caps are being removed as of October 1. So the two I like to focus on is you've got, like, for example, here in Brizzy, the market cap at the moment is 700,000. That's now increasing to 1 million as of October 1. I think in your Sydney, I think that's increasing to 1.5 million. So the market
Yeah.
caps are increasing, and that's moving with, I guess, with the times, the capital growth that we're seeing Australia wide at the moment. The other eligibility that is coming into play is your income caps. So at the moment, well, previously as of October, before October 1, the income caps for singles needed to be 125K or less. And for couples would be, you had to earn under 200K as a couple. That's been completely removed. So your higher income earners can now get yourselves into the market. I mean, I've had a couple of clients and scenarios previously where when you're saving for a home, and it's very common out there, you start working as much overtime, you pick up extra shifts, you pick up a second job. All of a sudden, you then hit over the market cap, and you can't use the scheme that you've been working really hard to use. So whilst, yeah, I think it's a good change coming in, that those higher income earners and those are really putting in the work can have access to the scheme as well.
Yeah. Okay. Cool. And so just it means that there's more availability. And is the scheme capped in terms of the number of people who can access it in a given year, or is there anything around that aspect?
Yep. So up until, again, October 1, another great change that's coming in is it used to be
Yeah.
35,000 spots. Now that's become unlimited. So we could have 35,000 people apply as of October 2, and it's not going to use all the spots. So I mean, that's a lot of work for a lot of brokers out there. We can all hope, but yeah, unlimited spots now. So I think this is, again, if we're looking at it in a positive light, this means that people won't rush into it. When we've seen in the past where they make major changes to these schemes, people rush into these schemes, may not be completely ready to buy their home, or it might not be the perfect time for them in their situation. So with unlimited scheme spots, this means, which is from October 1, this means that people can not rush into something.
I was just thinking about a scheme and the timing of the scheme driving consumer and market behaviour. You don't have to look too far if you look at like the household battery scheme that's just come in, and it's gone. People just deferred getting a household battery until July 1 when that kicked in. And suddenly there was literally 1,000 a day who were getting household batteries. So that's interesting. I think not to go into this too long because I want to focus on the what and the how, but if it is unlimited, a lot of people are saying, "Oh, this is going to put a rocket under markets," and that might cause the market to get away from people more. And I think there's probably an element of truth to that. But in reality, if it's the scheme's unlimited and you're not going to at risk of running out, the worst thing to do would be to buy the wrong property or buy when the timing's not right for you anyway. So I think, yeah, that's really, really good advice. Okay, so we've got eligibility for the program. It's national and it varies from state to state and even like city versus regional. I think that number you said, like 1 million in Brisbane, is Brisbane. But if you're, you know, not in Brisbane, I'm trying to think of a place in Queensland that's probably maybe Toowoomba, for example, so regional. The caps are different again from memory. I think that's right. Does that sound right?
Yeah, correct. I believe that the on October 1 that the regional is actually going into part of the home guarantee scheme as well now. So there's not two separate schemes. We found it was a little bit confusing. You jump onto the website, you have to sort of work out where you're buying, what scheme you fit into. So now it's all becoming the one scheme, which is a much easier to navigate.
One scheme. And I guess where I was going with that was that when you're in a state where, let's say you're in Queensland, firstly, there is this, okay, let's get rid of some LMI, okay, and the federal scheme, this home guarantee scheme, helps with that or can avoid that altogether. Amazing. But then there's two other parts of the cost equation that come into play as well, one being stamp duty and the other being first home buyer grant. So help me understand where each of those two things fit in vis-a-vis the scheme.
Yep. So I think it's really important to start with you can layer your federal scheme, which is your home guarantee scheme, with your state-based incentives, which is your stamp duty waiver and your first homeowners grants. So you can use them interchangeably. Now, what again, we don't know what's going to happen as of October 1, but what I can see starting to happen is you've got your federal scheme, which the price market caps have increased. So I'm going to use Brisbane on base here, so it's easy for me to use, of 1 million. But the state-based stamp duty concession hasn't moved. That still remains at 700,000. So previously, you get on the scheme, you get your state-based stamp duty concession, you're only upfront is your 5% deposit. If you're now looking at more of the market increase of a million, which is the cap in Brisbane, you will have payable stamp duty. It's 30,850, which then increases your deposit from that 5% to closer to 9%. And I think we're all a little bit, we're used to interchanging these schemes and just be, oh, cool, 5%, get our foot in the door, happy days. Whereas this is going to be a bit of a change for everyone entering the market.
Okay, so there's still a consideration of state-based stamp duty exemptions and the tiers for those, and it's different in different states. And if you can come to a broker and understand. Jake can help you understand that exactly. But one doesn't entail the other necessarily. So you've got to be careful you don't trip yourself up and go a $900,000 property, not realizing you might have 15-20 grand worth of stamp duty, even though you're not paying LMI. It's going to be interesting because there's probably going to be this sweet spot where people are like, properties that are available that are under both exemptions, both tiers, to make it so you can truly get in with 5% and nothing else. And then in terms of, and I think most states don't have these anymore, but there's still some first homeowner grants floating around relating to new builds and things like that. So these can be laid as well, right?
Correct. So up here in Queensland, they've got an increase up to 30,000 now for your new builds, or new homes. So you can add that up on top. It's important to note your bank still wants to see 5% genuine savings. So that 30,000 may help with if you're having to pay stamp duty. So again, check state by state what's still available, but you can use those interchangeably.
Yeah, okay. And let's just talk about that term genuine savings because, we work in mortgages and throw that around quite often. Like, what is it and like what constitutes genuine savings? Like, what's the term actually mean and how's it used?
To keep it nice and simple, genuine savings is savings that you've saved. So generally, and every bank is slightly different, but generally a bank wants to see that 5% in your account for 3 months. Not lump sum, not you've rung up your broker and that you've had your 5% deposited in the account the day before. So we want to see what the banks
Right.
want to see genuine savings in your account for that 3 month period. There's always oh, there's always exceptions to the rule when it comes to genuine savings, but rule of thumb in the account, 3 months, happy days.
Got it. And so what the bank's essentially saying is we want to see that you have at least some capacity to save money. You may not have been able to save 20%. We get it. And we're happy to let the government, shoulder a bit of that burden. But insofar as understanding if you're a good credit risk, we do need you to demonstrate that you're able to spend less than you earn and put some of that money aside. And the mechanism by which they do that, as you said, is often just to look at the 3 months. I think I've heard in other cases some lenders are like will look at rental and say that ongoing rental payments can count for genuine savings. But a lot of what they're looking for is to ensure that you haven't just had someone gift you let's call it $50,000 and you've clearly got no fiscal responsibility whatsoever and someone just happened to lend you $50,000 or give it to you. That's kind of what they're looking to avoid.
Correct, exactly. So there's instances and institutions out there will happily take a rental ledger for 3 months to show that, yes, you're paying rent, so you have a capacity to pay. But if you're living at home with no savings and that 5% just happens to pop into your account the day before you see your broker, that's where the bank's risk appetite might not be where it needs to be for your type of loan.
Very diplomatic language. We love that.
Keep it simple.
Basically, get organised and yeah, keep it simple. Exactly, exactly. Well, it's actually probably a good segue. So, just in terms of kind of the sequencing of things here, like let's say, all right, I'm a first-time buyer. I've had a quick skim of the program, and I think I'm eligible for the program. the income thing's not a matter anymore. We're definitely planning to buy underneath the threshold for our state. We're a citizen, all the basic eligibility. Like typically, like what are the steps that you would suggest for when they should be researching or when they should be saving or when they should be talking to you as their broker? Like talk me through the key steps in the journey here.
So my biggest belief, even when you think you might be years away, is always speak to myself or your broker or advisor early on in the piece. Before I even started in finance, worked in finance, I saw a broker 2 years before I bought my home to just get a bit of an idea and a bit of information and learn about the process. And you might find that you're well ahead of where you need to be, or it might be that this is what we need to do to get you where you need to be. So the first process, talk to myself, your broker, and then we'll talk about your eligibility for the scheme. We'll then conduct some of your serviceability, run your calculations, and just sort of run through what the process looks like with an eligible lender. We can also assist you in the application forms for the first home guarantee. They can be a bit fiddly, so we can ensure that's filled out correctly. And if we're ready to submit that pre-approval, we submit that as part the application form with all your other documents to the lender as part of the pre-approval process. Once we're all pre-approved, and that's your pre-approvals in place and you have your scheme pre-approval through the lender, you then have 90 days to find a home and sign a contract. The home loan will also need to be approved by the lender based on their own lending criteria. But then you find your home, you sign your contract, and your broker will manage the final approvals. And then you're settled, you move in, get your keys, and hey, happy days, bought your first
Have a
home.
bottle of champagne, do whatever you're going to do.
As easy as
I'm kidding.
that, hey.
You make it sound so easy. Just in terms of getting approval for the scheme, though, so it sounds like there's a piece. There's almost like two lodgements, right? Where you have to do this lodgement for the scheme, and then once you have that, or as part of getting your home loan, the lender needs to see, hey, have you got your pre-approval for for the scheme as well? And so these things kind of happen in tandem and kind of related to each other.
Yeah, correct. The easiest way to do it is do it as part of the pre-approval, and then once you've got the what we call the formal approval, that's when what we call the guarantee is issued by the lender, and that will sit on
Got
that
it.
that loan. And it's also important to note with that guarantee that you need to retain the guarantee throughout that home loan. So you must meet the ongoing requirements, such as living in the property, because it's for owner occupiers. And if this criteria isn't met, the guarantee might no longer apply. So, for example, if you haven't built enough equity in it to release the scheme and you want to turn it into an investment property, so then the lender may require you to pay lender's insurance or other costs.
Yeah, right. Okay, so you're kind of on the hook for is that for a 12-month period, or is it
It's
that kind of stipulation, or you've got to be in it until you get under 80%?
under 80%. So there's no time frame. So again, we're lucky, especially in the last few years, that capital growth is in a lot of regions has gone very quickly. So it doesn't take that long of a period, but it's important to note until you're under that 80%, and that's off a bank valuation, that you'll still have that guarantee on. There's been a couple of instances where we just due to working circumstances where a client has bought a property and then they've had to then move to a different location, and that property hasn't reached that 80% threshold. So then they've had to essentially refinance that into an investment home loan and pay that lender's insurance.
Yeah, that's so super interesting because I think when we normally think about these first home buyer schemes, they come with you have to live in the property for at least 12 months. But this isn't about that. It's about avoiding a cost that would otherwise be incurred by the borrower, weirdly to the benefit of the lender, by the way. This is the thing I think most people don't understand about lenders' mortgage insurance. It doesn't actually insure you, it insures the lender against you or
Bingo.
in case of you. Yeah.
Yeah.
So it's an interesting one. But insofar as a scheme that provides that level of insurance cover, it is applicable if you are living in the property. So if you moved out 2 years later, for example, for fully legitimate reasons, but it hadn't got to the 80% threshold, then there may be some mortgage insurance payable because they're essentially going to restructure the loan from an owner occupied loan to an investment loan. And they're like, by the way, here's some mortgage insurance that you now need to pay based on whatever your new value and LVR, like equity position is.
Yeah, and that's exactly right. So it'll all depend on where you've purchased, what the growth is like in that area at the time, and look again, advice: go speak to your broker and see what your options are at that stage. Cross that bridge when you come to it.
Yeah, and just in coming back to one thing you said about the approval, so doing them in parallel is kind of what makes the most sense. If say someone came and got on the phone after hearing this and had a chat to you, is there any value in them going and getting their pre-approval for the scheme and just having that in the back pocket, or it's like it's really no point having that? And that bit's actually it's not means tested, it's not a massive application. You might as well just do it when you're going to get your pre-approval.
Well, I would do it when you're getting your pre-approval because then, therefore, you've got a bit of an understanding of what you can borrow, making sure that it's going to suit what you are wanting to do, what you're wanting to purchase, if it fits with you within your
Yeah,
goals. That gives you like the
yeah.
pre-approvals there as an understanding of how much you may be able to borrow from a specific lender. So that just gives you a bit more clarity of what you can do and making sure it still fits in in the scheme eligibility.
Yeah, cool. And it's probably a little nuanced. I don't know where it sits in the grand scheme of things, but let's say someone buys a place to live in, and them and their couple, they're a couple, they live there, but they have a spare room, and they decide to like rent that room out or Airbnb it or something. Is there any kind of constraint or stipulation around that? Do you know?
Nothing on the first home guarantee. No, no. There's the
Right.
you can
Okay.
have a family member move in and help out around the house, do the dishes for you while you're at work paying off that mortgage.
However you structure that. Lenders sometimes look at that a bit differently, I understand, but it sounds like the scheme
Correct.
doesn't look at it too much.
No.
Okay, and then so the primary thing that's changed, because this scheme's been around for a little while, but the main thing that's changed is that it's unlimited and there's no more income caps and there's revised upwards caps in terms of property values. But other than that,
Yep.
it's essentially the same scheme as it was over the last couple of years, right? Or last year or so.
Yeah. Exactly. They a few years ago they went and changed the name, which confused everybody as well, from the first home loan deposit scheme to the first home guarantee. So they've kept the name the same this time, which is music to my ears as well.
Absolutely. And then, is there any, whether it's with the old scheme or the new scheme, are there any kind of traps that we haven't maybe already covered to be considered at all, or anything to be worried about?
Look, first trap, and we have covered this. So I won't go through it in depth again, but it's those upfront costs. So just make sure you're aware of your stamp duty, any government charges. You've budgeted for legal fees, building and pest inspection, any upfront lender fees, and even moving expenses. Make sure that you've budgeted that in your upfront costs overall with that 5% deposit. One thing, another trap I should say is, and these probably go hand in hand, these two, is bigger borrowing. So you've got higher caps. So bigger borrowing does mean a bigger commitment. And then it coincides with serviceability pressure with lenders. So bigger borrowing and bigger commitments mean that, look, previously, again, here in Brizzy, it used to be 700. If you're now purchasing for 1 million with a 5% deposit, that means those repayments are going to significantly increase, of course, if you're borrowing more. So a couple of little calculations, and this example I've got here is just at 5.5% interest rate, just to make it nice and easy. So 700K purchase, which is a 665K borrowing, is about 872 per week. A $1 million purchase at 950K is 1245 per week, which is about 373 per week or 1600 per month more, which is a huge amount of money. I don't know anyone that has that much disposable income at hand. So whilst you might be able to, go, oh cool, I meet the cap to go up to 1 million, just keep in mind that means you're going to be borrowing a lot more because you're borrowing 95% of the purchase price in this scheme. And this goes hand in hand with the
Yeah.
serviceability pressures as well. So lenders still run their strict serviceability assessments. So even with a 5% deposit, applicants must show they can make and can afford their repayments under stress scenarios. So the high debt levels that the new caps are brought in, the buyers may qualify for the cap in theory, but when the banks do their serviceability test, it might fail. So the banks
Got
still
it.
add their 3% assessment buffer rates to these calculations as well. So just important to note. those as well when you're
Yeah.
considering what you're going to do.
And it was kind of woven into what you were talking about there, but I think a common misconception that comes out of a scheme like this is that the government's giving you money. And like, let's take your $1 million example, and you've got 5%, which is $50,000 deposit, and the government's chipping in $150,000 of a guarantee, so that so that the risk to the bank is 80%. They're essentially guaranteeing 150, but they're not actually putting 150,000 cash in. They're just guaranteeing that that 150,000 the bank won't lose, so that there doesn't have to be mortgage insurance. But your loan amount is not 800,000; it is 950,000. And so your repayments are 950, your servicing is 950, and you will have to pay off from 950 to 800 to get, assuming property values don't move at all, but just for the maths, assume
Yep.
to get to that 80% where you essentially unlock and then you can do whatever you want with the property without penalty. And so I think that's going to be a common misconception is people are like, awesome, so I've got a 20% deposit. Well, not really. You have a 5% deposit, and someone else is probably why they kept the name guarantee, by the way, so that it
Yeah.
wasn't confused as being a deposit. But I think that's going to be a common misconception for a lot of people is they'll be like, why are my repayments on a $950,000 loan? I thought I had 20%. Well, you do and you don't. So no, that's a really good shout out around that. Any other traps? I think that's the big one. I think, but any others that you're aware of?
Look, the only other one, and again, everyone has an opinion on it, but it's just the market competition and sort of price pressure that these new changes are going to instill into the markets. Whether you're in Brizzy, you're in Sydney, in Melbourne, um, with the unlimited places, there's no income caps now. The pool of buyers may explode. Um, I was doing some reading, and the Treasury has modelled like an uplift of around 0.5% on property prices over 6 years. Now, I think if we're being realistic, I think that's quite modest. I think here in Brizzy last quarter, I think we exceeded 0.5% of property
Right.
price increase. So not sure where they got those numbers from, but we all know we're dealing with historically low levels of inventory already. The governments are falling short of housing supply targets, which means there's more buyers chasing fewer properties. Look, in theory, um, this might drive up property prices even more. Um, depend it. We don't know what's going to happen. Obviously, now that stamp duties aren't meeting, that might mean that it's not as big as boom as everyone seems to think because you're going to need more upfront. But yeah, those entry level houses, anywhere sort of from 700 up to a million, I think we're going to start to see a lot more competition. So just keep that in mind, especially over the first 3 months of this scheme.
Yeah, so like the risk here is that there is a lot more competition and people might, get caught up in that, buy
Oh
the wrong
yeah,
asset, or FOMO might strike and all these types of things. And and the other risk obviously is that you sit back and say there's unlimited spots. I can take as long as I want, and the market might go up by 10%. So it's going to be. No, we neither of us have a crystal ball. It would be hard to see how a thing that helps more people buy when the supply side is the same doesn't create demand spike. So it's just at a macroeconomic level, you'd think that's going to happen. Uh, but that said, I think at the individual level, like the number one thing is always make sure you buy well. Whatever it is that you're buying, make sure that
yep.
you not only can afford it and not only can get the loan approved, but that the underlying asset is good. From that perspective, are you seeing a need for, or an option at least for people to consider maybe getting like property strategy or buyer's agency involved in with that decision, or is it something where it's just a watch out for you and run some numbers? Like, how are you thinking about that?
Look, education is always important, isn't it? So I have a little saying where buying a home, especially your first time, it's almost like a full time job, right? When you're, especially in this market where you're going to open homes every other afternoon or a Saturday, you're talking to agents, you're fighting with a dozen other buyers, doing the research, having as much information under your belt is going to be is going to help you tenfold in the future with whatever your strategy is. So the more information and education that you can get, and if that's through buyers agents, doing your own research, whatever that might be, it's always going to be beneficial for you.
Yeah, I think that's a good way of framing it, because for some people, some people love it, in their first time, and they love getting out there and they love learning about it, and they want to self learn and they want to get educated. For others, it's like, I know that I need to make good decisions and I have some knowledge, but maybe limited time or confidence even. And for them, professional help. And I think to your point, get educated, but don't limit yourself. Your broker can be a great source of education about all this, and professional help can be. And also, there's plenty of resources out there to self learn on a bunch of this stuff, including podcasts like this.
Exactly right. Exactly right. And look, we do it every day, so if we can supply as much information as we can, we've got our feet on the ground. So whatever we can do to help.
Awesome. Well, Jake, I'm probably will close it there. I think if I had to give people one like specific bit of like recap on this is, if you are a first home buyer or considering buying, it's actually not never too early to give your broker a call, because you kind of want to know where you stand, and you can't, and it doesn't take long. It's not a lot of effort. You don't have to go and get a bunch of documents and stuff like that just to run the numbers. It's something I'm like really passionate about personally. So like I think for a lot of people, their starting position will be listen to a podcast, watch something on YouTube, read some stuff, and that's great. Do that for sure. But at the point where you actually want to understand your position and maybe anything you might need to do to get to where you want to, get scheme ready or get lender ready, having a quick call, with your broker is really the greatest starting point. And it doesn't oblige you to do anything or really require too much time or effort either. And you just, as you said, fully informed. Any other closing points for our chat today?
Oh, look, I couldn't agree with that sentiment more. It's get and chat to a broker, get a plan in place. If we'll be the ones to tell you whether you're ready to go now or what you need to do to achieve your goals. I can only speak for myself, but I'm sure most brokers feel the same way. We love those chats, those initial chats. We don't mind if you want to check in every 3 or 6 months just to see how your progress is going. Um, Keep in contact with us. Things are always changing, so you never know when you might be ready if you aren't right at this stage. And hey, you might be surprised, and we might go, "Hey, let's just get it sorted now," and you'll be like, "Cool, I thought I was 2 years away." So, yeah, get in touch with your broker and get a plan in place.
Lovely. Awesome, Jay. Well, thanks so much for joining us on the show today. Pearls of wisdom in there, and look forward to talking to you again soon on the show.
No, I appreciate the time. I hope I made a great debut.